Is the crash that's been predicted since 2019 finally here in Northeast Florida? Not quite. Mike Rolowitz here, 904 Home Guide team with the Real Brokerage in Jacksonville Beach, Florida, looking through our April market data from our friends at the Northeast Florida Association of Realtors and the Market Distillery. Are we crashing? No. Are things softer than they have been? Absolutely. So let's break down first Duval, St. Johns County single-family home stats that will pop up right here. Then we're going to look at some seasonality, and then we added a new chart that is looking at supply and demand and how that's affecting our market. So if we look, first data point, median sales price, $395, rebounded from March of 2025. So last month, we're up 5.6 on our median sales price. We're down from last year, which has been the story. Our market has just been sawtooth and seesawing up and down, really going sideways for the last 2+ years. Closed sales after a really strong March ticked down a little bit, about 1,400. Median days on market. Homes are taking longer to sell. Now that's at 41 days, 28% increase since last month and up 40% since this time last year. New listings, really up fractionally. Our market, when we get to the seasonality chart, you'll see it's behaving very much as it has in past years with one notable exception, and that's how many active listings we have. And that's going to be less a causation of new listings spiking. It has more to do with buyer demand dampening down a little bit. Our active inventory of 6,880 single-family homes across Duval and St. Johns County, up 11% since last month, 27% since this time last year. So sellers, that's what we've been telling you. Got to get your price right. You have to understand there's more competition, more choices. Our month supply of inventory, we're back in a balanced market, which is defined as 4 to 6 months. We're right down the midline. 5 months of inventory basically means at the rate homes are selling, the 6,800 homes, if no new listings came on, would all get absorbed in 5 months and there'd be no homes to buy. A very far cry from the fractions of months to 1 to 2 months we had during the pandemic years. So that's a 17% increase from last month. So that gives us the overview. Now let's look at how our market's behaving. And if you look at the seasonality charts, we're going to go through 3 of them here. First one is our closings. Though they were down this past month, they are following the pattern. They've risen for the first 3 months, ticked down just a smidge. We expect them to pick back up. We had a 20% correction in the stock market from February to April that spooked a lot of buyers. Our market's about 30% cash buyers. So people did not feel as confident to buy homes, even though it's a great time to buy. There are opportunities that abound. So closings are acting the way they should. Our median price, March was a little softer than usual. We did rebound in April. You'll see that typically rises, peaks around June, July timeframe, and then starts to fall into the fall. So we're tracking seasonally, but we're below that 20-year average. I think the big story, as it's been honestly for the past 2 years, if we look at the active listings chart here, is how steep that orange line is versus the blue line. How many additional units we've put on. We went from 9,100 to start the year to now we're at 10,849. Now note, that's across our whole MLS. So that's a 5-county region. So a bigger region, but the slowdown in demand means these new listings that are coming on are not being absorbed and inventory just keeps stacking up, which is leading to a lid on prices and also the buyer demand that we talked about with interest rate concerns, with tariff concerns, with the correction in the stock market. It's a very uncertain time. For buyers, I think it's a buying opportunity. We've had some recent deals that have been very favorable to our buyers, from seller concessions to price negotiations to negotiations during inspection period. So would love to connect, see how we can help you on the buy side. Sellers, different story. Right now, it is all about price and presentation in those first 30 days. You got to get it right. We look at the last chart that we're going to add here that looks at supply and demand, and we're looking at from 2018 till 2025, just the first quarter of those years. What did new listings look like? How many closings happened? And then what is the difference between those numbers? What is that surplus? And as you can see, the green bars up top on new listings, that hasn't changed a whole lot if you look against the average. What has changed quite a bit is the closings. The average closings are about 6,500 in the first quarter of any given year. The pandemic years, 8,000, 7,800, obviously up. 2025, you can see not even 5,500. So we're 1,000 closings below, which is leading to that surplus, which is leading to that increased inventory, which is keeping a lid on price appreciation. And it's making it really, really hard, especially for those sellers that are not selling in those first 30 days to get a price close to their list price. I think if we look at this 97.5% list to sold ratio, that's primarily homes that sold in the first 30 days. The ones that are selling beyond that, you're not going to get the number that you want. So as a seller, our advice really has not changed. It's pricing is paramount and presentation is everything. You only get one chance to make a first impression. Showings are down per listing, so you're not getting as many at bats, so you got to get it right from the start. We can help. If you want to deep dive with me on the data, leave a comment below and let's connect, and we will see you next month.